In this video, we're going to go through 3 different high-yielding dividend stocks that are all beating the S&P 500. Now, if you're not familiar, a high-yielding dividend stock is a stock that pays a high dividend yield relative to its stock price. In other words, it's a stock that pays a high percentage of its earnings to shareholders in the form of dividends. Now, it's also important to note that not all high-yielding dividend stocks are created equal. There's many high-yielding dividend stocks and ETFs that you're definitely going to want to stay away from. And a good rule of thumb for a newer dividend investor is to most likely stay away from all of them. And this is because high yields can be unsustainable. Companies that often have higher dividend yields may be paying out more than they can afford to pay out, which can lead to a reduction or suspension of the dividend payment in the future. And take a word of advice from an investor like myself that's been through multiple different dividend cuts and even a dividend suspension. It's one of the worst feelings in the world. Also, high yields can be a signal of trouble. A company's stock price may decline a lot, which makes the yield skyrocket. Now, this could be a sign of distress financially or a lack of overall growth prospects. Now, finally, oftentimes when a stock is offering a very high dividend yield, it can often mean that it's sort of a trade-off. Most likely the share price of this stock is going to stay relatively stable, if not even decrease a little bit over time. But like I said earlier, in this video we're going to go through 3 names that are high yielders, but in my opinion have a lot to offer. Now the first stock we're going to go over is EPD, or Enterprise Products Partners. Now EPD is a publicly traded energy infrastructure company, and it operates in the midstream sector of the oil and gas industry, which involves transportation, storage, processing of oil, natural gas, and other petroleum products. EPD owns and operates an extensive network of pipelines, storage facilities, processing plants, and exports terminals that span across the United States and even into parts of Canada. Now, Enterprise Products has a forward dividend yield of 7.28%, an annual dividend payout forward of $1.96. EPD has a 75.6% payout ratio, but EPD does have a good track record of 23 years of dividend growth. And historically speaking, if you look at the dividend history, EPD is definitely on the up and up as far as dividends they pay their shareholders year over year. Now, if we take all things into consideration, like dividend safety, like dividend history, and the future potential of growth, Enterprise Products offers a lot. And stay tuned because later in this video, you're going to see how good Enterprise Products has done compared to the S&P 500. The next higher yielding dividend stock on the list is Main Street Capital, ticker symbol MAIN. Now, MAIN provides long-term debt and equity capital to lower middle market companies in the United States. MAIN primarily invests in private companies with annual revenues between $10 and $150 million in EBITDA, between $3 and $20 million. The company's investment portfolio is diversified across various industries, including manufacturing, healthcare, retail, and technology. Now, even though Main Street Capital offers a 6.7% forward dividend yield, the dividend would be considered rather safe. With a $2.70 annual payout, 2 years of dividend growth, and a monthly frequency of around 23 cents, Main Street Capital definitely also makes it onto my list. Now, the last stock on my list is ticker symbol VICI or Vici, which is a publicly traded real estate investment trust. Vici specializes in owning, acquiring, and developing gaming, hospitality, and entertainment destinations across the United States, with some of their largest tourist destinations in places like Las Vegas, Atlantic City, and New Orleans. Now, Vici has been one of my favorite newer investments, with a starting dividend yield of around 4.75%. And keep in mind this dividend yield was much higher as of recently, but now Vici's skyrocketed in price, which is definitely bringing the yield down. Vici pays a dividend quarterly and has around 4 years dividend growth. And even though Vici doesn't offer that long of a track record, I do think that the dividend increases coming soon are going to be monstrous. Now, maybe most importantly, let's look at the total return for the S&P 500, Enterprise Products, Main Street Capital, and Vici. So surprisingly enough, on the 3-year time frame for total return, which means dividends and share price included, the S&P 500 returned 51.62% total return, which is quite good. EPD returned 117.41% over the last 3 years, Main Street Capital 146%, and Vici, the winner, at 175.97% over the last 3 years. Now, obviously, it's important to look at the total return on multiple different time frames. But even still, in the 5-year time frame, S&P 500, 67% in the green, EPD 44%, Main Street Capital 76%, and Vici 177%. So even on multiple time frames, the higher yielding dividend stocks that I chose for this video are doing quite well. And this is significant because most of the time, if a stock or ETF has a rather high dividend yield, it's not going to have the best total return. a lot of times you're going to see share price decay. And a lot of times, even though a lot of the higher yielders offer a high dividend yield every month or every quarter, the total return normally suffers. So as of right now, in 2023, these are the 3 high yielding dividend stocks that I would put up against pretty much anything in the same class. But I want you guys to comment down below. What are some of your favorite, safe, high yielding dividend stocks that have a decent track record and also offer a decent total return? If you enjoyed this video, make sure to please drop a like on the video and subscribe for more. Thanks as always, and I'll see you in the next one.